Thanks very much, Morgan. Boston Fed President Susan Collins talking about the things you guys are talking about. She said it could be appropriate to reduce rates this year, but renewed pressures could delay policy changes. That's renewed pressures on inflation. She says that confidence is needed that the tariffs are not destabilizing inflation expectations before the Fed could act. And here's a direct quote. She says, quote, "The signal would have to be compelling to take preemptive action and do what the Fed normally does, which is that in the face of recession, declining growth, the Fed could come in and cut rates. Can't do that now without a clear signal. Fed policy could face challenging trade-offs requiring a balancing act between competing objectives on both sides of the employment and the inflation mandate. The response is going to depend, as Fed Chair Powell has said, on the distance of employment and inflation from the Fed's goals." And then she talks about just what Ralph was saying. There is a wait-and-see attitude she hears in her district that is now commonplace among households and firms that could have a negative effect. Morgan, we've heard now, I think, 4 Fed speakers today. It's interesting to me they are all basically singing from the same hymn book about not being able to really react here, about the way their policy choices are frozen because of what's happening with the inflation side. They can't address the growth side, at least not now. There don't seem to be any doves or hawks on the Fed. There's just everybody right in the middle here.